You guys may have noticed there's been some really big moves in the stock markets and the bond markets, okay? Everyone's going to be talking about this massive move up that we saw in bonds, down in the stock market, and I want to show you guys exactly how to handle this. Now, we did a webinar a couple days ago about this coming volatility explosion, and it happened a little too fast, okay? The move we were looking for happened just 2 days later. Today, we saw a major move up in the bond market, down in the stock market, and I want to show you guys how we're going to handle this. Now, I'm going to show you just a couple minute clip from the webinar this week, setting up the trade that we were looking for that happened today. But after the clip is over, I'm then going to show you the next trade we're going to put on, how to handle, how to react to this major move up that we've seen in bonds. So I'll be right back.
Are thinking, oh my God, that's so bearish for bonds. We should absolutely be short bonds. I know everyone can't wait to be short bonds. Look at this chart. This bond rally has been going on since I think I was born right there. The only real serious downtick we've had in bonds was when I was born. 1981 was the low, and we've been in an uptrend in bonds for that, like, what, 34, 33 years? And in fact, this sell-off is what everyone is so hot and bothered about the Fed stopping their purchases of bonds, stopping the quantitative easing program. And you're going to tell me that right there is a reason to go short bonds? And trust me, I'm guilty. I'm looking at little sell patterns myself day to day with clients, but I constantly have to remind myself of this trend in bonds, which this is a technical channel. Okay, it defines the uptrend. We couldn't even get to this bottom part of the channel to test like we've done many times in the past. This one fell short too. Okay, so it looks like there's an uptrend, a major uptrend coming in bonds. That is at the same time the Fed is going to sell $4 trillion worth of different kinds of bonds on the market. So if you're telling me bonds are going to go up, but the Fed is going to offer $4 trillion worth of bonds on the market along with other central banks holding their own bonds, and the uptrend is going to continue, there's going to be something major coming. And there's going to be a reason why people are rushing into the safety of bonds, because they don't want to be in stock.
Okay, so now you know that we were looking for a big move up in bonds, which we've got. Now what do? Do you panic out of stock positions? Do you pile into the bond market? Do you go to cash? No. In fact, let's dive into the charts, our specialty. This is how we guide our clients around the world, and we'll show you exactly how we're going to handle this major move up in bonds. Now, here's the 30-year bond chart, and we are looking at resistance, which is a technical price ceiling up around 138.5. We are going to take this opportunity to actually short bonds. How do you short bonds? Well, you do it with an exchange-traded fund. It's a share of stock, symbol TLT. We're going to put on an option position tomorrow to take advantage of this price ceiling in bonds, sell into this overreaction that people have seen, this massive degree of panic that we were looking for earlier in the week. All right? So be on the lookout for the trade. Be sure to sign up for our email list. We'll email you out the trade and keep you up to date day by day as to exactly how we're going to handle this trade and more trades like it to come in the future. All right, good luck trading. Remember, stay cool, and we'll talk to you guys soon. Thanks.